I'm Maggie Williams, editor of Reward magazine. I'm here today with John Ritchie, CEO of Ellipse, group life and disability insurer and part of the Munich Re Group. Good morning, John.
Morning, Maggie.
So John, we're going to talk about the relationship between auto-enrolment and broader workplace benefits today. So auto-enrolment has pretty much dominated the employee benefits landscape for the last 2 years or so, really. But now we're beginning to understand the relationship between the pension side and other broader benefits. How does that relationship work from an employer perspective?
We see this, of course, from an insurer's perspective, but the thing that has struck me, Maggie, is the number of root and branch reviews in schemes of all sizes. So we've gone through the first staging date, the very biggest employers, the big retailers, distribution companies, who had blocks of unpensioned people. So what we've seen how that has triggered a review of what they provide people around the periphery of pensions, how much life cover, maybe even how much income protection, long-term sick cover that they get. And that has brought some really interesting, previously self-insured companies to the life insurance market. So that is in itself been a growth stimulus. We could see last year, 2012, the group risk market, life, CI, disability grew by 10%. In the context of flatlining recession. So it is the stimulus to an overall review of your whole employee benefit program in the sort of the core staples, as it were. How much money you've got for your old age, how much money have you got for catastrophe in your working life, life cover, critical illness, income protection. So it changes everything is how I'd characterise it.
And what about the employee? What's in it from their perspective?
Well, from an employee's perspective, I think awareness levels are very low, and research shows this. In fact, research shows that awareness level among smaller employers, the next year and the year after, that's been an issue. So the Dragon's Den, people wandering around saying your employer has to put money into a pension pot for you, hasn't really worked. So what we have had is quite a lot of negative talk about this from certain parts of the political establishment, but from a policy point of view, this is a very big moment, because what has happened is that we've got a level state pension for everybody now, £140 a week. What that means as an individual is, you know you get that, so everything you save through auto-enrolment or any other vehicle does not in any way prejudice or penalise you in what you get from the state. So that is a big public policy moment. Now, when we get over the next election, it'll be interesting to see who wins as to whether there's any rowing back from that. And I personally hope not, because this is one of those long-term public policy, political issues that spans a generation. My generation needs to know that, because I imagine you're quite a bit younger than me, we need to know that there's going to be some state support, but largely we've got to provide for ourselves. I'm in the tail end of the baby boom, and frankly, there are just going to be so many old people that we need to change the way the society deals with this. So I think employees, I would quite like to see more engagement with employees to explain what's happening to them. The best companies are doing that, but many are not, big and small.
And what do these changes mean for small and mid-sized businesses in terms both of their reward strategy and the systems available to support that?
Well, I think basically it's one of those 50-50 scenarios. Half of the employees in this economy historically have had good pensions. They've had some sort of pension. It comes with life cover. Often it comes with some protection if people are too ill to work or they have a catastrophic injury. But the other half have just not been in it at all. Now, the new norm will be for people to be a member of a pension scheme. Australia have had this for 15, 20 years. And if an Australian comes to work in the UK and you hire them, they often say to you, what do I do with my 9%? Because they know that 9% of their income goes to a pension pot. So that it will become the new norm. And that will be a good thing. That will be an absolutely excellent thing. Now, as to the readiness of major pension providers or the life industry for this change, that's another interview. But I do think that it is the new norm. And again, having a decent amount of life cover or sickness cover through your work will be the new norm for that half of the unpensioned workforce. It's a good thing.
And what advice would you give to businesses currently planning for auto-enrolment?
Don't panic. Don't listen to the panic, and also don't get caught up in this "it's more red tape" reactionary comment. Everybody has to do real-time filing with the revenue now, and they do that electronically. So they should basically say, it's already a platformed world. I have to have software and systems that enable me to file electronically with the revenue. Auto-enrolment, or even a reward or a HR system that is tagged onto that, is just an extension of that already platformed environment. So don't panic. Ask your accountant, ask your advisor, ask anybody who provides payroll or benefit software to you already. Ask them about whether there's something that could be a multi-purpose middleware for all of these things. So I would say plan, think about joining your data up, join your payroll to your HR and benefit middleware. Then think about how can I access pensions and other benefits efficiently because I have the data on a platform. And I think they'll be pleasantly surprised. I think there's lots of really good software and middleware emerging, and they might actually economically be able to have very good benefit programs, efficient and cheap, and have more than they thought was possible.
John, thank you very much indeed for your time today.
My pleasure. Thank you.